Well, today we have a very special guest here on the ET Now floors. There's a biography on him, and surely, why not? It's a life which needs to be celebrated. Please join me in welcoming none other than the MD and CEO of the National Stock Exchange, Mr. Ashish Chauhan. Ashish Chauhan, thank you so much for taking the time out and joining in. Looking back, the boy from IIT Bombay, IIM Calcutta, to now this glorious journey that you've had, and now you have a book on your life as well. How does it feel?
No, I think it's life as usual. Basically, the book is not written by me, somebody else has written, and the book kind of captures some portion of my journey from childhood. So in a way, it's kind of deja vu. But with somebody else's perspective.
Like you said, you know, you first were part of the formative years of the National Stock Exchange. 30 years ki journey. From there, did you ever imagine that today the National Stock Exchange would be what it is?
No, first time when I was told to shift, I was a project finance officer in IDBI in 1991. I joined 91 after college at IIM. And I was basically doing project finance means you need to do a lot of projections of future cash flows and other things for companies. And so I was one of the young ones. That time computers...
आपके पास वो Excel sheet है जहाँ पे आपने NSE का future projection बनाया था?
I did that too. But before that, and I mean, IDBI and India did not have computers, so IDBI bought computers.
Wow.
And so people started going on strike. All officers and employees went on strike saying, computers will take our jobs. And so in that, I was just out of college and I started doing, those time Lotus 1, 2, 3 was there. And my other colleagues would take a month to create those projects. I would do it in, once I have prepared, it will take me a few seconds to change the projections. And that was like magic. So my bosses started thinking that I am good at IT, whereas I was actually not an IT engineer. I was a mechanical engineer who knew how to do Lotus 1, 2, 3 or Excel sheet, what we call now, right? So, but when NSE had to be set up, they needed, after the initial team, I think one of them dropped out. So they needed a young person who was engineer, who knew IT, and who will not say no. That was me, right? So that is how life sometimes happens through serendipity. So I was moved from 9th floor to 19th floor, and for me it was just another job. I had no idea of how life would pan out later on, but it has worked out well.
So from that upgrade of 9th to 19th floor, which floor are you headed in next?
Now, of course, I am on 7th floor of NSE, but life takes you up and down, and I have seen my share. Of course, when you write books like this, you don't write the not so glorious parts. But naturally, every life has its own ups and downs, and we need to be acutely aware that what you read is only a small fraction of trials and tribulations people go through.
जैसे कि आपने बोला that nothing comes with its shares of ups and downs, and that's exactly what the market is, right? And I remember very close to the book launch when I met you at the National Stock Exchange, you said that the markets are like a love relationship. You know, there will be the fights, there will be the ups, and there will be the highs. And that's exactly how the market as well is. Where do you think the market is headed next? You know, itna challenges hai, tariffs pe uncertainty abhi bhi chal rahi hai. There is earnings softness, lot of question marks being raised upon when the rural recovery will actually come, even though the RBI has, you know, fired all guns blazing. Where do you think the economy is headed?
In a way, why things happen, there are reasons, and why things will happen, there are reasons, right? And so for me, if you look at overall the situation where we are standing, the world is softening for a variety of reasons because of the, of course, tariff war. But then the tariff war is an outcome of a long drawn movement away of manufacturing into China and services into India from rest of the world, right? So in that context, now the rich countries of the West are feeling slightly poorer. And they are asking that if you want to access my market, you need to pay tariffs, which is, of course, in a way, recessionary because it brings down demands, it increases prices. And that's where last year, when things started being talked about, people should have realized. At the same time, and so there is going to be an impact of that longer term trend. The second trend, which we have not discussed because it happens over 20, 30 years, so life goes through a lot of other noise, so we don't look at that signal, is demographics, that the world is becoming old. Other than India, Pakistan, Bangladesh, broadly, rest of the world is getting older, from Japan to China to Europe to US. It's decisively older demographics bringing down the demand. But it will bring demand up for the hospitals and healthcare and many other things. So you need to understand where the life is going to go. And the third long-term trend is technology. That technology is the only thing which changes the world. And the technology that has changed over the last 30 years has also changed India decisively. It has made India what it is today, the world power in services, information technology. And it's also going to take India up because of the same reason. The changes in technology are going to come even faster. And India being the youngest, highly technology-oriented country compared to our neighbors or other younger nations. And of course, we are a very large market ourselves. So overall, on a scale of 25, 30, 50 years, India has a glorious future. In fact, I many times say that in 1,000 years, when technology race was run, we were not even in the stadium.
Yeah.
Now we are at the front line, and today we have a chance to become rich before we become old. Because we will also become old as a society by 2100. But before that, we should all work hard to become rich. Within that, the geopolitics, which is happening, people who have a lot of money, they feel slightly poorer, they start coming after the poorer countries saying why you are coming up. And those things will continue. We have to mend our ways. We have to ensure that we are good with people who have money, who need us. We learn from them. We bring ourselves up. And of course, maintain our dignity in terms of negotiations and all. And that's what, in that context, I think today, what we call bilaterals, the era of bilaterals has started with Donald Trump.
Yeah.
Before that, last 50, 60, 70 years, where the era of multilaterals. And multilaterals had given very little importance to India. The bilaterals are now a situation where we are being given importance because we are important. Now we are fourth largest economy. We are also up and coming economy. We are highly technology-oriented economy. So people will have to give us importance. And many times I say that when now the new geopolitics is defined, India will be counted. We were not. In fact, when World War II got over and the Bretton Woods was called, our economists also went, but as a part of the British Empire, because we had not become independent then, right? So for me, the post-World War II multilateral systems of World Bank and UN and WTO and every other thing, WHO, is actually now becoming more irrelevant in a way because of the way the new situation has evolved. But the bilaterals is where we just signed one bilateral with...
You were part of the Prime Minister's contingent.
Right, yeah. And UK, and that tells you that now India is able to kind of ask for each pound of flesh. And for me, so if you look at, say, 20, 30, 50 years time horizon, there is nothing better than India. And we have seen it in last 30 years. So many times markets have gone up and gone down. But average, we have given the growth of 6.5%, 7%. On rupee terms, we have given CAGR of almost 12, 13%. In dollar terms, we are 1% higher than S&P 500 in those 30 years. So we have done wonderfully well in last 30 years. But I think next 30 years would be, or till what Modi ji says, 2047,
yes.
Dixit Bharat, we would be doing immensely well compared to the rest of the world.
But what is the message, Ashish ji, for retail investors? Because they get affected by the noise, they get affected by all the headlines, and they also get affected by the lofty valuations. I understand that in the long term, there's a reason why India will continue to command that premium. But in the near term, does that work well for retail participants?
For me, the retail participants are of two types. One is what I call retail traders, and other is what I call retail investors. Investors would not watch this show or next to next show and try to decide what to trade, what not to trade. The retail investors would be investing for long term, and if they do not have time because they have other jobs and they have savings, they would rather invest through mutual funds or portfolio managers or advisors and things like that, because those are experts and they should go through them and not trade in derivatives. Then there are a class of people who are basically retail investors or retail traders who would try to take every signal, like what Donald Trump has said, China how many times, and they'll try to sell or buy. Or so for me, it's not only retail guys who do it. There are professionals also who do it. There are algorithms which pick up all those things now and start trading. But that is what I call trading on the noise. For me, investing on signals is what would have given India or Indians huge returns. And in a growing economy like India, there will be worries about valuations, because that happened to even Japan. In 1960s and 70s, Japan was always several times higher in price earnings compared to the other economies which had become already developed. But in 80s, the Japan had become developed. Their real estate bubble and all those things brought it down. But effectively, when a country is growing very rapidly and is expected to grow even more rapidly in near future or longer term future, people do give you larger price earnings. And that doesn't mean that is the correct valuation for that company or for that economy. But broadly, just a show of strength of the economy for the future that is being counted, that the overall profits are going to increase in that economy.
One thing I wanted to talk about is what's happening in the primary market right now, because a lot of IPOs seem to be struggling, sometimes even below their issue prices, and retail is losing a lot of money there. Do you think there is a disconnect between what the primary market is up to and what the secondary market is holding up?
In a way, primary markets, when there are what I call good tidings in the secondary market, many more companies do come for the primary markets because they think they will get a better valuation. And that's why when they start coming out with IPOs at a good valuation, sometimes the prices go down post listing, and many IPO investors who have started believing that the investment in IPO is a sure shot, huge returns guaranteed kind of an activity. But returns are never guaranteed in stock markets, and that should be remembered, whether for IPO or otherwise. Everyone should study the business model of the company, the profitability, the future profits of the company, how steady the business model is, how the world is poised for that industry, how the world is poised even otherwise, the liquidity situation, and many other things before investing in secondary market, but also in primary market. For me, today, the way post, I think 94, we have gone away from prescription-based regime to disclosure-based regime, which means the IPOs, they have to disclose everything, but then you have to take your call. Earlier, some bureaucrats used to determine what premium should be charged by the companies. That is gone in 93. We have almost 22 years of experience since then, and broadly speaking, it has turned out to be well. At the same time, investors will have to keep in mind that even primary markets will go through ups and downs, especially in times of turbulence like this.
But I wanted to understand, how insulated do you think Indian markets can be from the global volatility which is currently at play?
No, nobody's or no country or no human
is decoupled.
All of us are connected, and that's the concept of a human society, right? Everyone is connected. And in that context, everyone tries to also manage their own risks. They have their own situations. And today, if you look at overall situation, we have almost $700 billion of foreign currency reserves, which will take care of us even in the worst of times. Even if you've seen COVID, we have come out very nice, which was pretty much one of the worst periods of sort of human history. And that's how I see that overall, India is reasonably insulated because of its internal demand, its young demographics, its technology orientation, its way of working as a democracy. So overall, India is a better position with all its foreign currency. And in that, when I look back in last 11 years, what has happened did not happen almost 67 years before that. It's because we have now become literally close to surplus in our overall trade balance, or trade imbalance as it used to be called. Now it has become trade balance. But if we had not become that sanguine in our foreign currency management, in our fiscal management, we would have been in a similar position like what Pakistan is in, or in Bangladesh is in, which is that they have become bankrupt as governments. They have to go to IMF all the time to ask for a loan. I mean, they keep on asking for a $1 billion loan, and every week pretty much NSE is raising few $1 billion for its companies newly getting listed, right? So last year alone, we raised some $220 billion for on date and equity put together. And that tells you where India has come. Otherwise, if you recall, in 2013, we were part of Fragile 5.
Yeah.
And today, we are in the Strong 5, right? So why this has happened, largely you have to give credit to the government and their ability to control fiscal deficit. Also, they cleaned bank books, although the banks went bad during Mr. Modi's time, but the loans were given before that. But again, somebody has to clean up. It's easy to blame past, but you need to still
Someone's got to do the job.
Right, and that's how it has been cleaned up. What I've been told is today, Indian banking system is pretty much the most solid banking system in terms of the NPAs vis-a-vis rest of the world, the overall leverage in the economy vis-a-vis rest of the world. And so there are many, many things going good for India, which will in a way tide you over to the global uncertainties that are being brought in by geopolitics, but also by technological changes. And in some ways, India would be the beneficiary of the technological changes that are happening, from AI to the deep tech to the space tech and many other things. India is going to be the larger beneficiary on a scale of 5, 10, 20 years.
Since you did touch upon banks, I wanted to talk about what's playing out right now. As an economy watcher, the stress in the MFI segment, which we've seen in the case with few large banks also, is that a little bit alarming, or do you think that's more a one-off event, and would it bottom out soon?
It does, because when the interest rates go down, the banks also will find it challenging because they have borrowed at a higher rates, and so it takes some time for them to adjust. And similarly, when interest rates go up, ultimately banks are basically people who take your money, give you in some ways less interest, and lend at a higher interest. So they, on the long run, they are always in profit unless they make really wrong decisions on the credit side, right? And that's where broadly the credit side part has been taken care. The bankruptcy code has helped in cleaning up some of this. And broadly speaking, I think banking system in India overall also, even as a leverage, although many people, many economists see only India across time zones and say that we have now more leverage at the household level, and that's why we might not do so well. But the rest of the world is immensely leveraged. I mean, Chinese banking system is now, or financial system is almost 4:1 leverage, whereas India is actually half compared to GDP, or probably 60% of GDP. So we are way, way low leverage overall, and that also gives them, or the banking system, an ability to finance India for all the growth that is coming.
Sure. So I want to talk about one darling theme of the markets, which of course you're also going to be part of that stack, the capital markets theme. I know you're not going to tell me the timeline of the NSE listing, but what is your own vision for what Indian capital markets shape and size could be, say, in the next 5 years?
I mean, it's anybody's guess, but if you look at, say, 13%, 12% CAGR, which we have given last 30 years, it would be literally on a principle of 72, you are looking at pretty much doubling the size of the market in next 5-7 years, right? And that's happened. Like I was in UK last week, and I was going through some numbers. When NSE started in 93, in 94 we started operations. we were less than probably 2-3% of their total market cap. Today we are double their size, right? And that tells you what this economy is capable of. It's just starting up. There is a much longer way to go. We are $3,000 per capita GDP. UK is probably 45,000. US is 88,000. We are long way away in achieving those numbers. And so we have to continue to work hard, not feel complacent. But if we continue to work hard, use technology well to support ourselves, but also to support the world, I think sky is the limit.
But given that equity markets are a forward-looking beast, you don't think that most of the capital market listed entities are already quoting and pricing all the good in their current valuations?
No, these questions have been asked to me for last 34 years. And I still think that when growth happens, it surprises many of us because we are used to looking at the noise and getting drawn in the noise. Look at the long-term signals, right? And that's what I started with saying, look at the technology growth, the demographics, the demand, the ability to create ecosystems, to create growth, and of course, an ability to sort of negotiate on real time. That is what democracy is all about, right? Many groups which feel left out, they want their pound of flesh, they have to be given, and so on and so forth. So it's a fascinating sort of things going forward, that India is pretty much looking like a shining beacon, not only sitting where I sit, but also from across the world. And that's what, for me, what you see today, I mean, the earnings season is there. You have to be on screen all
That's
24
our job.
hours, right?
Yes, bread and butter.
And you start talking and you think, no, life is going to end. It doesn't. Life will continue with or without me, right? And India has a glorious future, and that will be on the back of services, that will be back of now manufacturing, but back of its young population, its non-violent population, its technological oriented society.
So NSE 2025 listing or beyond that?
In a way, we are still awaiting the no objection certificate from SEBI. Once, because we are a regulated entity, we need sectoral regulators, no objections. Once that comes, it'll take us a couple of months, probably 3-4 months to create our RHP, and then we'll again submit to SEBI for their approval for the RHP, which will take another 3-4 months. So for me, it's still far away.
Next year ho jayega.
Yeah, it's still far away.
Great. So that's that on India, the world, the vision for capital markets and NSE. What are Ashish Chauhan's own personal goals for the next 1 year or 2 years?
Yeah, how does one remain useful to the society? And also useful to the society, right? Basically, in some ways, the jobs which I have done most of my life is to act as a regulator, as a service provider of very critical infrastructure in India. And that makes you a little immune to day-to-day ups and downs, but you need to be there every moment. Things have to work. The life, people will be excited, people will have the sorrows, people will have joys of making money, losing money, things like that. But you need to ensure that the system continues working without being emotional. And that's
How do you keep your equilibrium?
Not to get involved in the stock markets. In terms of as an investor, I do still invest in ETFs and all, but a very small portion of my wealth. Most of my wealth is in some ways on FDs or real estate, because that at least doesn't move much. And I'm not allowed to trade in stocks because of the job I have. So,
ironic as it may be. But thank you so much for your time today, and thank you for joining ET Now as well as ET Now Swadesh viewers.
Thank you.